evening. Today I'll be doing cost sheet. Hello student, I've seen some videos on YouTube where different teachers and experts they are describing cost sheet and unnecessarily they are mixing up. Now when you see examinations, only 8 marks coming in intermediate or IPCC. This is the chapter which is very basic, and sometimes you have to do other problems in these formats. For example, job costing. Now I'll simplify the cost sheets in such a manner, if you really observe, then it's become very easy to you. And truly speaking, which item to be under what head is not fixed always. It might be placed sometime under overheads factory related or overhead related to office under administrative overheads. Let's start with. So today my chapter is cost sheet. Cost sheet. Now let us see what is cost sheet and why do we prepare it. Cost sheet is a statement of all cost of productions of a particular product. It could be a single product, it could be a number of products, but the same product in many numbers. Now it is a statement showing the steps where the costs are chronologically absorbed, and thus we define on the basis of stages of absorption. We define cost like prime cost, we define cost like factory cost, then cost of production, then cost of goods sold, and ultimately cost of sales. And from cost of sales, we get the difference of sales, which is profit. So this profit, is your net profit? No. Because in the cost sheets, many financial items we are not including, like bad debt, or say provisions for bad debt, or say any other finance charges, we are not adding here. So we are removing this. Only accumulation of cost which related to the product. So cost sheet's profit is not your net profit. Is it a gross profit? Never. It is not a gross profit. Why do it is not a gross profit? Because we accumulate the administration overhead and selling and distribution overhead, research and development cost. So such an item never find place in your trading account, financial account. Now, in short, accounting is financial accounting, accounting is cost accounting, accounting is financial management or management accounting. So we classify accounting under 3 major heads. Here we are doing the cost accounting. Now cost sheet is a statement showing the total cost of productions. There are two purposes. One purpose is to find out the exact cost of the product. Another purpose is to analyzing the cost which involved for developing as well as at the point of sale, that is the cost of sale. We are analyzing all the cost so that we can find out unnecessary cost and we can cartel the cost. So your cost of production become minimum per unit. So when cost of production become minimum per unit, we can sell the product at competitive prices. So there are two, so that we can increase our productions, increase our revenue by increasing the sale unit, by providing unit price or selling it at the least price. So, to curtailing the unnecessary cost, and we try to find out the exact cost and curtailing the unnecessary cost. So there is a concept of cost controlling, cost curtailing. So our profit improves. Now let us see or let us discuss. First major head is direct material. Direct material. Or we can say the material consumed. We can say the material consumed. Material consumed. Now, what is material consumed or what is direct material? Here is direct material means raw material, obviously raw material. Raw material. Now, raw material or material consumed, we find the figure. It could be like 10,000, 20,000, 50,000. How do we arrive at? How do we arrive at? Suppose we started production on January 1st, 2020. So, that day we had material in hand, or raw material in hand. So, opening stock, add purchase of raw material, less return, you can do the return of raw material. Now, purchase cost as well as all other costs involved with the purchase, like carrying into what? Again, and then we say, okay, December 31st or say June, 6 month, June 30th, 2020. Stock in hand, that is less clothing stock. We will reduce less clothing stock or stock in hand. Raw material in hand, stock in hand. Stock in hand or clothing stock, which date? This date. So clothing stock we deduct and we get the material consumed. But I now not finalized till now. Again, here many expenditure which might come itself here, which is not given in your books. Some books might be given, but most of the books you will not find. Now let's see. Inspection, of raw material, now what is inspections? Generally raw material is coming or at the supplier place, I take with me some consultant to work there, the expert to work there. We visit and test the material, whether is it eligible for the improved product or product. So inspections of raw material, then after raw material digest, that charges will add up. Then washing of raw material, cleaning of raw material, heating of raw material, all charges relative to raw material to be put together and then added up. That becomes your cost of raw material consumed. You have to understand. First stage, we are calculating the prime cost. While calculating the prime cost, direct material cost, that is material consumed, will be accumulating. Next, I'll be accumulating direct instead of material, direct wages. Then direct expenses. All these three together become your prime cost. So material consumed, you have understood. Then again accumulating the direct wages. Direct wages, or say direct labor, sometimes given, or simply written wages. Wages. Now direct labor or wages means remuneration paid to those workers, remuneration paid to those workers who are directly employed on production, either using machine or without using machines. So direct labor cost is somewhat different from the labor expenses who are bringing raw material, that is helping direct worker. That is different. That becomes your factory overhead. So overhead costs are quite different from the prime cost. Prime cost, yesterday in short I explained. Again repeating, prime cost means the cost primarily identifiable in the product. This is white material and green material, so blue material which is identifiable. So material consumed, and then direct labor. Without labor, it was not possible to put this finished product into proper shape. Then, so direct labor means labor payment for the production, add outstanding which you have not paid, less you are making payment and advance, not for today's work, so less prepaid. So direct wages is quite clear. Now direct expenses. Direct expenses. Sometimes it is called as chargeable expense. Chargeable expense. So if you are given direct expense or chargeable expense, obviously under this rate, apart from this, you might be given as such, like hire of special machinery for productions, this particular product, or say purchasing or say hire of some software, that is direct expense. I use the production facility in facility of other person or other company. So I pay the royalty on production. That means per unit I produce, I say pay 5 rupees. So royalty on production should come under this head. So it is well understood chargeable expenses are identifiable at the production site. So direct expense, chargeable expenses means the expenses which identifiable at the production site. So hire of special plant, special machineries, or say purchase of hiring of some software to be utilized for current productions, or say royalty paid on productions, or any say sometimes we want to keep the temperature at certain level, hire of such a special purpose thermometers or special purpose arrangement like machinery, special purpose like software, all these should come under the. Now here the prime cost. Very simple. Now, here is it prime cost over? No. There might be like opening stock of certain units which were left previously at prime cost stage. So, add work in progress. You should be given like at prime cost, at PC. At prime cost, that should be added. Similarly, less WIP at prime cost, that you have to deduct. So we get the exact figure of prime cost. This is the prime cost net. Prime cost net. Here I might use here the word loss. If they are provided WIP at prime cost on two different dates, 1st January 2020 and 30th June 2020. That you have to understand. So, till now, prime cost is very clear. I have accumulated direct material, direct labor, direct expenses, and I have reached to prime cost. Now, with prime cost, now I have prime cost in my hand for the current production. So, prime cost. All are in values only. Prime cost. Add factory overhead. Factory overhead. Sometimes it is called works overhead. Or sometimes it is called production overhead. So, factory overhead, production overhead, works overhead, whatever name. Overheads are the expenditure over and above the head of prime cost. Example, cotton waste, fuel, power. All the expenditure I'll be accumulating which are at the factory places, as well as works manager salary, as well as engineer salary and allowances, depreciation on machinery, furniture, fixture, or sometimes indirect material is there, indirect material. All to be accumulated under factory overhead, and we get, after the accumulation of all overhead, we get the total factory overheads, and then these factory overheads, if we add up, we get the factory cost or works cost. production cost. Production cost. Now, the production cost again is gross. Again is gross. Production cost again is at gross, because with this, after you get this, again add WIP opening, that is 1/1/2020 less WIP at closing, that is 2020 June. Now, if this is greater, then deduct. If this is greater, then this is net is added. We get the factory cost net. Factory cost net. Now, we have to understand a little bit some factors like this factory cost or production cost. Again, we start accumulating other expenditure at your office level. At your office level. So, prime cost, here we add factory overhead, add factory or works overhead. We get the factory cost or works cost. Factory cost or works cost. Obviously, at WIP opening less WIP closing, we get the net. Make adjustment, then we get the net figure. Work cost net. This is work cost net. Now, add office and administrative overheads. Here, under office and administrative overhead, we should also add product development cost. Product development. We should add up research and development R&D cost on of the product, then management cost or administrative cost. Now, under administrative cost, several items like employee salary, office lighting, office rent, printing stationery, everything should come. Under research and development, if you go visit any company or any like works or plant, you will find there is a separate research and development center where for every product, every finished product, company is going to make sell, where the product development is going on, as well as research and development going on for providing the best product at less price. So all these costs will be adding up. Factory manager salary, factory overheads. Office manager salary, administrative cost. So you have to understand all this. A particular employee, if related to factory overhead, his salary. Particular related to research development should come here. Administrative cost should come here, office. Printing stationery should come here. We get the cost of productions. So production cost and cost of production is different. Cost of production. Very quickly, cost of productions. Here, add clothing opening stock. Suppose here we get like total 1 lakh for our simplicity. 1 lakh. Now total production is 1000 or 10,000 units. We simply divide. So per unit is rupees 10. Opening stock could be like 3000 units. At 9, so we'll add up 27,000. 1,27,000. Now less closing stock, say 2000 unit. Now we know 10 rupees, so at the rate 10, so 20,000 I'll be deducting, so we get the 1,07,000. This become our cost of goods sold, CGS, cost of goods sold, this value. But we are selling how many units? 10,000 plus 3,000, 13,000 less 20. So we are selling 11,000 units. We have to understand this calculations. So we have reached CGS. Now CGS, cost of goods sold, 11,000 units at a total cost of 107,000 on FIFO basis. Now here will be selling and distribution. Overheads will be accumulating. Now selling, distribution, overhead like carriage out, advertising, sales manager salary, then I'll be adding like pre-sample cost, all to be accumulated, commissions and to be added together, say 13,000. So total become 1,20,000. This is your cost of sale. This is your cost of sales. Cost of sales 1,20,000 we have reached. CGS we got this. Then cost of sales 1,20,000. We get the cost of sale. Cost of sales 1,20,000 and say sales here 1,40,000. So 20,000 profits, say 1,42,000. So 22,000 profits. This is your profit. Gross profit, no. Net profit, never. 11,000 units. So per unit is 2. Profit per unit. 2 rupees profit. Per unit sale price could be calculated. Per unit cost of sale could be calculated. So my dear student, cost sheet is to be understood. Brainstorming into the facts and try to simplify every time the item you found and try to put or utilize your head under which head should come and where do we make adjustment of WIP at prime cost level there, at worst cost level factory cost. So you get your total factory cost net, then selling and then administrative, research development and product development cost. Then you get selling, distributions, cost of production, then selling and distribution overhead, you get the cost of sales. Difference of cost of sales and sales is profits. Per unit profit could be calculated. I'll pick up some which came in the previous year's C examination and to coming videos or coming times. So it's become very clear to you. Good night.